So now I'm going to talk about 5 core mistake, okay, that you should avoid as a funded trader in the market. Okay, so we're going to talk about the first mistake that a lot of you guys maybe made it. Some of you guys, maybe you had some payout. Some of you guys, you are planning to get some payout. Some of you guys are funded, and some of you guys trying to get funded. It doesn't matter. All of this 5 mistake. It's a general and the human nature. So you should open your eyes and listen to them and try to avoid as much as possible you can for this mistake. So let's talk about the number 1, trading without funded focused plan. So what's that mean? A lot of you guys, you don't have any plan for trading. So I'm not talking about the trading plan. I'm talking about the goal, the overall plan. So let's say a lot of you guys just are thinking, okay, I'm going to just get 100K challenge. I'm going to pass it. I'm going to make 2 or 3%. And I'm going to make, let's say, $2,000 or $1,500, something like this. Okay. And done. That's it. You don't have any long-term goal. You don't have a long-term goal. And this long-term goal, so you are focusing on the, let's say, to be honest, a lot of you guys, you don't have a long-term goal in trading, especially in the funded space. Okay. So a lot of you guys thinking just, okay, I'm going to pass it. I'm going to do some payout. I'm just going to enjoy the life. Now, that's not going to be a whole plan. You should have a funded focused plan. So what's that mean? That's mean, first, you should realize, okay, if I want to go with the 100K, okay, what is my next target going to be? Let's say you just get your first payout. You get your first $2,000 payout. Now, what is the next plan? You're just going to keep continuing like this to get $2,000 payout, $2,000 payout every 2 weeks. That doesn't going to be disappointed, isn't it, right? So it's going to be a little bit, you're going to force yourself to start to in one level. That's not going to make sense. But how's the overall plan going to look like? You're going to start small. That's so important. A lot of you guys, you are not starting small. Okay, you think if you learn an ICT or any strategy out there, and if you do some back testing and a small forward testing, okay, that's it. After that, you're just good, and you're just gonna go and buy 100K. You're gonna spend $500 on the challenge, and you're gonna fail it, and you're gonna start to cry, and you're gonna say, "Why I failed?" And trading is a scam. But this is completely wrong. You should start small. The reason that I say start small is because of the organic confidence, which I'm gonna talk about this. So once you start small, let's say if you start, let me tell you something, guys. There is a rule in the life. Okay, there is one rule in the life. If you are driving Toyota right now, let's say if you're driving a normal car, okay, so your next car can't be the Lamborghini or supercar, right? If your current car is let's say a normal general, city driving car, your next car can be a Lamborghini, can be 10 more high value than that car. Should be step by step. Okay, so my first car was Golf GTI. Okay, then my current car is Mercedes-Benz CLS. By the way, I had Lada, the red Lada, the Russian car also. Okay, I just bought it for fun. I just get the payout and just bought it for fun. You can see the photo on my Instagram. And my current car is the CLS. Okay, now my next car, I'm planning to buy a Corvette in the next 2 months, the Corvette 2022 C8, right? So, and after that, things going to get bigger. So if I'm driving a CLS Mercedes-Benz right now, my next car can be a Bugatti or Lamborghini, right? Should be step by step by step. So here's the thing. If you are not funded with $5,000 payout, if you didn't have any payout with the $5,000 payout, right? You can be a $100K payout as a 100K, let's say, funded. You should pass this step by step, okay? And one of the good things once you pass this step by step is you building an organic confidence, okay? You have enough confidence because you saw all the journey. You start from a $5,000 up to $10,000 or let's say $15,000 or $100,000, okay? So you saw that progress. You felt that. You faced those challenges. And at that point, or the confidence that you have, because guys, confidence in trading is so important. Confidence trading is so important. And a lot of you guys, the reason that you fear, that you overtrade, that you can make profit, you can't open trade, you feel a stress once you have an open trade, is because of confidence. You don't have confidence. Okay, so this is gonna help you a lot. Now let's say the next one here about the funded focused plan, is your strategy, right? So a lot of you guys, you're buying the challenge and you're on the phase 1, and what you are doing to do, to be honest, you're planning for 10 risk to reward. You're risking a lot, okay? That's not gonna make sense. The trading plan that you have and the strategy that you're using should be funded focus plan. That means if the phase 1, okay, needs 6% or 10% to pass, okay, design and change the trading plan shape, okay, to get matched with the phase 1 requirements. So let's say if the daily drawdown is a 5% in the phase 1, let's say this was example, right? Okay, and your trading plan tells you you can catch 4 trade and risk 1%. This is wrong. Okay, you should change your trading plan to, let's say, to match with the drawdown that you have here. Not exactly match. I recommend to be a little bit lower, like make your trading plan to a 2% daily drawdown if your prop frame phase 1 daily drawdown is 5%. Okay, so you should sharp and change your trading plan to be a funded focused plan. Okay, and especially risk management. A lot of you guys risking huge. By risking huge, and you can pass a funded challenge. To be honest, let's say you can pass it in the phase 1 or phase 2, you can risk 2% and you can pass it in 1 or 2 trade. But once you go to the live phase, okay, you're gonna fuck it up. You're gonna lose that account. I'm gonna guarantee you. Why? Because you train your brain, okay, to risk a lot, okay, to catch the low quality setup and the risky setup. And once you go to the live phase, one of the hardest challenges you're gonna face, okay, it's gonna be change back to a good habit that you had. You can't get back it because you was on that bad habit, right? So it's like smoking weed or smoking something bad in the phase 1 and phase 2, and in the live phase you want to stop it. You know, it's gonna be so hard and sometimes impossible, right? So you should pay attention about that. So treat the phase 1, phase 2, and live phase same. Okay, for me, passing the 1 step 200k challenge, for me, take around, I can say, 33 days. I can show it to you right now. For me, it took 33 days. Let me just show it to you. I know it's a little bad, but it's okay. Let me just show it to you like this. For me, passing a 200k took 34 days. See, I share all the trades with my student and my private community from day 1 to day 2 to all the steps. I document the journey here. So that was the day 1 until up to day 34. So that for me took 1 month, right? For me took 1 month. But you should treat the phase 1 and the live phase same. That's so important. So let's go with the second mistake. The second mistake is ignoring risk parameters or ignoring risk management, right? So a lot of you guys ignoring the risk management, and a lot of you guys, you don't know what is the risk management is. A lot of you guys think you should open a lot size. A lot of people message me, Ebo, in the gold, how much lot size I should open. That's completely wrong. Okay, so you should learn the risk management. Risk management is not about the lot size. It's about how much you want to risk on the balance or the equity that you have. So you should calculate that with some software that you have. You can say in the My Facebook you can calculate that, right? And that calculation gonna tell you how much lot size you should risk if you want to risk, let's say 1%, 2%, okay? And risk management, the only thing gonna save you in the risk management. But a lot of you guys also using the risk management, but still you're not profitable because of the risk to reward that you have. A lot of you guys, you're aiming for one risk to reward. A lot of you guys, you are aiming for 2 risk to reward. This is not gonna make sense. As I told you, if you are day trading, the minimum risk to reward that you should go with is 3. And the maximum should be 4 or 5, depending on the strategy. My strategy, because I'm getting a low time frame confirmation entries, I'm aiming for 4, right? So, yeah, that's the main thing you should understand about that. Okay, and another thing that's so important is treat the phase 1, phase 2, and the life is same. That's so important. That's super important. And how much I should risk, it's depend on your strategy. I can't tell you how much you should risk because I don't know you and I don't know which strategy you're using, but I'm risking 1% on my high quality setup and my A+ setup, right? And I'm aiming for 4 straight reward. So if I take 3 stop loss in a row and if I take 1 win trade, 4 straight reward, okay, that 1 trade gonna clean my break, gonna get me to the break even and plus 1% profit. So now let's go with the third mistake. Okay, a lot of you guys facing this. Okay, over trading or chasing setups. Okay, a lot of you guys over trading or chasing setup. So what that mean? That's mean after one stop loss, okay, you're trying to return that money. You're trying to do anything to revenge from the market. You guys know this, right? We call this revenge trading or over trading sometimes. If you trade a lot, that's been over trading. Okay. So over trading is the biggest enemy. And the reason that you over trade because you don't have daily limit and the weekly limit. So I know how much trade I can catch in one day. My trading plan allows me to catch one trade per day. Doesn't matter if that's going to become stop loss or win, I can catch 1 trade per day. So in the week, okay, I have a drawdown. Okay, I have a drawdown of, I think, 3%. If I hit minus 3% drawdown in a week, in just 1 week, I'm stopped trading for that week. Now, for opposite of this, also I have a daily profit and a weekly profit. What's that mean? That's mean if I made one win in a day, which is gonna make me 4%, I'm done for the day. If I made 2 good trades in a week, which is gonna make me 8%, I'm done for the week. And if I made, let's say 16% in a month, I'm done for the month, or maybe 12% sometimes. Okay, I didn't hit the 60% in my life. My record in a month was 12%. So yeah. So I have a daily profit, weekly profit target, monthly, not a target, limit. That's mean if I made 4% in a day, if I catch 1 good trade, made me 4 risk reward, and I'm risking 1%, 4% a day, I'm gonna stop trading. I'm not gonna do anything, right? And opposite for my stop losses. So if you want to stop over trading, you should use this rule. You should put yourself a limit, weekly limit, daily limit, weekly profit, weekly daily profit. So these are so important. It's gonna so you stop over trading. And you chasing the setup. A lot of you guys, you are trying to chasing setup. What I mean from a chasing setup, right? Once you open the chart, if your strategy tell you there is no opportunity for the day, you are waiting for, let's say, trade here, but price is here, you should wait. You can't wait. A lot of you guys, you're trying to scalp until the area that you're looking for to buy or sell. Okay, and guess what? That's me chasing the market. Guys, let me tell you a good thing. Okay, we all know this. If you want to earn more money, okay, you should stop chasing money. You should let money to chase you. And it's the same thing. Okay, if you want to catch a good trade, you should stop chase the chart and you should wait to price fall in your traps. My strategy is not giving me a trade every day. I catch 4 trades per month, 5 trades per month as a day trader, not a scalping. And scalping is different. I'm not scalping anymore, but in my scalping is different. So I'm catching 4 trades per month. Now, from 30 days, let's say, from 20 trading days, I'm just trading 5 or 4 of those days. Okay, because I'm not chasing the market. If I want to chase the market, those 5 trades per month gonna be 10, 50, 20, who knows, right? But because I'm not chasing the market and I'm waiting to market fall for the traps, from those 20 days, I have the best 5 days to trade on. That's it. You should be super patient. If you want to make money in trading, you should learn how to be patient. If you are not a patient, if you can be patient, if you can control, and if you can stop being hurry, right? Just stop trading. I'm going to be honest with you. Stop trading and go and find a job for yourself. because trading is all about the waiting and patience. The mistake number 4 is no trade journal or emotional tracking. A lot of you guys, you don't know what is the journal is, and that's so funny. If you want to be profitable, you should have journal, and journal is so important. Journal is so important because in the journal you're gonna track your trades. You're gonna track your emotional tracking. You're gonna track your exact P&L, and every month or every week you can get back to the journal and you can open your journal and see the trades that you take stop loss, and you can start and refine those trades. Okay, so if you take 3 stop loss in a row and the reason of those stop loss was same, so you can check your journal and you can see the reason and you can think why you catch a stop loss. Because even if you take a stop loss right now, your brain doesn't gonna work. A lot of you guys, you're gonna get emotional, you're gonna be angry, right? But after 2 days after that stop loss, you're gonna completely forget about that stop loss. So your brain lets you to start to think logically. Guys, if you want to be profitable, and the key of the profitable is just journaling. That's it. I'm gonna tell you the key. Just journal. Journal, review your journal, and try to refine your strategy based on your journal. Because the best mentor that I had was my stop losses. And the best, let's say, I can say, playbook that I had was my journal. That's it. Journal and emotional tracking is so important. The last mistake is emotional trading under pressure. A lot of you guys, or we are human, right? We are all human. So sometimes in our life we are under emotional pressure. Maybe maybe we are sick. Maybe our friends died. Maybe we are in an emotional pressure, right? On those times, the best move that you can do is not trading. Give yourself a time. You are human. Because trading is all about decision. And if you want to be a good trader, you should cut the connection from the world, and you should cut the connection of the emotion and brain inside of you, which is impossible because we are human, and that's completely wrong. We can't do this and decide by logic. So this is completely impossible to cut the connection of the emotion and the brain in our body. It's completely impossible. Maybe if you want to be a hitman, yes, you can do that. But a lot of you guys, we can't be a hitman, right? And we can't let emotion in our body to be disappear, right? So, but what you can do instead is control that emotion. You can control that emotion. That's so important. You're going to control that emotion. You're not going to let that emotion affect you right now, or maybe 1 hour later, right? So what's that mean? If you're trading, if you want to take a trade and you start to feel your hands start shaking, okay, how you can control that emotion? You can, let's say, prepare a checklist for yourself. You can write a checklist. So what checklist you're going to write for yourself? Did I follow my strategy? Or I'm looking for market structure first and blah, 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 blah. A checklist. If you follow that checklist, and if you see all the steps of that checklist get followed, then you're good. Because you can control the outcome and you can control the market. The only thing that you can control is approaching and the decision that you're gonna make. Okay? So focus on the thing that you can control. If you're in the trade, you can control the move of the market. So why the fuck are you stressing? Why the fuck are you starting watching the chart like this for 3-4 hours? You can't control anything, my friend. Just go and enjoy the day. The only thing that you can control is how to approach, how to analyze, and that's it. And decide decision. That's it. That's it. If you be good at controlling this, if you was good at getting a decision and follow your trading plan, then good. You can control the market. Even if you catch the best setup of your trading setup, and if you take a stop loss, you can do anything. You can do anything because you can't control the market. But what you can control, it's your action. That's so important. So if you are in the psychology pressure, just give yourself 1 week time. The mind is so important. The mind, you should stay calm in trading. That's so important.